Hey guys, Merry Christmas. Let's dive right into this, right? Everyone's favorite topic, Toronto real estate. I know this is what you want to be doing during the holidays, watching videos from a guy like me talk about Toronto condo prices. So let's jump into this. I want to talk about finding deals, particularly because I think we're probably closer to the bottom than we are to the top. And I know a lot of people are going to jump in the comments to disagree with me, but I don't really care. So let's get into this. So if you look at the average Toronto condo price, this is where we are today. This is where we were at peak. Let's look at a couple of examples here. So you got 175 Queens Wharf. This was the worst loss I could find, okay? So this was purchased in 2022 for $920,000. And then we get to this one here at 16 Harbor. And this is more in sort of the average range of price loss that I'm seeing. You're 11% down, so 1.875 to 1.67 million, end of 2022 versus now. And then here you've got another, so Church and Young, this one down 9%. So 1.24 million down to 1.14 million. And that's just over a span of 6 months. So probably a failed closing, I would imagine. But regardless, I want to talk about finding deals. So here's a deal we just did. So this is an assignment at the Well. The original purchase price back in 2019 was 1.635 million. The assignment price that we managed to get it for is 1.425 million. And the deposits the original purchaser had down on this unit was $327,000. Now, if you haven't been to the Well yet, highly recommend you go. It turned out fantastic. One of the rare cases where renderings did equal reality. In fact, I would say reality exceeded the rendering, so well done to the team there. So this unit represented a loss for the seller. We were the buyer, so the seller lost $210,000 on this one. So the deposits from the original buyer to the builder, less the difference in price, brought us to owing the seller $117,000, which basically covered real estate fees and a minor amount of the deposits returned. What was really interesting to us on this deal was that RBC appraised it and agreed to finance it at 80/20 LTV. So they appraised it at original purchase price, which meant that our buyer, if they ended up actually just paying cash because of occupancy fees, but that's a whole other topic. Basically, RBC agreed to finance this based on the original purchase price of 1.635 million. So if our buyers decided to go forward with RBC financing, they would have only had to put down that $117,000 down, plus of course development charges. So you got another, 20 grand there or whatever. But regardless, that's really interesting. So it appraised at OP, so market value, according to RBC's appraisers, original purchase price at 1.635. We picked it up for 1.425. And this is the type of deal I like to see. Creative structures and financing like this can make diving into the dumpster of the assignment market, so to speak, really worthwhile. I'm going to show you how to find and structure these deals in this video and what I think you should be looking for, because there's a ton of crap in the assignment market and a ton of people just sort of fishing, hoping for the best. You got to find the motivated sellers, the people who can't afford to close. You have to find those people if you want deals like this. Now, before we get into that, I want to talk about people who think we're closer to the top than the bottom. I could be entirely wrong, but here's my rationale as to why we're closer to the bottom than the top. Okay. Fundamentally, does a 25 basis point cut really mean anything? No, because if people are in, let's say they're in the low threes and they're coming up on renewal, they're still renewing higher. And so I'm not saying prices are going to turn tail and absolutely rip into the new year. I actually don't think that's going to be the case at all. I think the first quarter is going to continue to be very quiet. But something that's interesting is obviously we're pricing in more rate cuts now than we were just in November. And something else that's interesting is the amount of people that I have trying to front run this, right? Something that's always really hard to control for is sentiment. And if you remember in spring of this year or last year, depending on when you're watching this video, all of a sudden, as soon as we had our first pause, the market absolutely took off. And there was really no reason for it other than buyer sentiment. A lot of people who were otherwise on the sidelines were suddenly in the market. And this, of course, comes at a time when our population growth in this country is absolutely unhinged. So we are now seeing our population grow at the fastest rate since any point in 1957. So again, I'm not saying run out there and buy anything you can. I'm just saying that there's a window of opportunity when it comes to assignments because of cost basis inflation over time. As we go further in the future, the assignments that are coming up on closing have a higher original purchase price. And what I can tell you from experience is the vast majority of assignment sellers, in fact, all of them, are capping their max loss at 20%, essentially original deposits. If I'm in a really tough spot and I absolutely cannot afford to close on this property, the most I am willing to do is leave all of the deposits, the 20% that I've already given the builder, walk away from that and have somebody assume the new contract. Even that deal structure alone is really hard to get because people have to really be in a tough spot to be willing to accept that, but nobody's going to pay you to take their unit. The reason and the rationale is I'll take my chances with the builder because they can only come after damages if the reselling price of my unit is much lower than the original purchase price, including that delta on deposits. And so therefore, I'm just not going to pay someone. I'd rather take my chances with the developer. And that's a fairly fair assessment for most people because if you're closing today on a condo, you probably bought it 2018, 2019, and market value today is higher than your purchase price in most cases. So why in the world would you not just take your chances with the developer? So what I'm getting at here essentially is good deals are made, not found. And in order to get a good deal, you have to be cognizant of the vintage of assignments that you're buying. So if you're looking for an assignment condo, and let's say that your thesis is that the market continues to grind down another 5 to 10% over this year, which I don't think is out of the realm of possibility, you have to realize that the people who are willing to lose 20% on their assignments today have a lower cost basis than the people who are willing to lose 20% on their assignment in a year. And by the way, you can go to precondo.ca/assignments and take a look at what we publicly have, but you'll have to email us because a lot of the time the asking price is just sort of a best case scenario. And I've got another example of an assignment deal we just did last week where the asking price was actually the original price. And this was a freehold in Markham, so over a $2 million purchase price. We actually got it for $400,000 below original ask. So again, it's just one of those things where you really, with assignments, you really have to go out of your way to structure a good deal because you don't know who's motivated and who's not just based on listing price. Nobody's publicly putting it out there. I'm going to lose 250 grand. You got to go out there and negotiate. So let's talk about price to market value. Okay. We're going to take this white line here and assume market value. And we're just going to assume it's the same next year as this year. That's not going to be the case. Who knows where it's going to go? But regardless, just for this illustration's purposes, we're going to say it's the same, all right? With pre-construction, you're going to pay a 5 to 25% premium above market value for the right to purchase, okay? That's just the reality. That's where we are today. You can see that when you look at the launch price per square foot of pre-construction condos over time in the city of Toronto proper. Now, what's interesting is resale somewhere in this band, somewhere around $1,200 to $1,400 per square foot. And again, I know there's going to be people in my comments who are like, no, you're wrong. You know, resale's $1,000 a foot in Toronto. Guys, we're talking about apples to apples comparisons here, all right? So, 0 to 4-year-old buildings, brand new buildings in comparable neighborhoods, yes, you're looking in the 1,200 plus square foot range. So, for example, if you're looking to pick up an assignment in the waterfront area of Toronto and you're trying to get a barometer of what stuff is worth, you look at 10 York, 1,200 a foot. You look at Harbor Plaza, $1,300 a square foot. So anyways, you can kind of see my point is you want to be picking off assignments that were purchased in these years. Because if people are really distressed, you can get far under market value on these deals. Whereas, if you're buying an assignment that's closing in 2025 from somebody who bought in 2020, it's hard for there to be a lot of meat on the bone for you as the buyer to make sure you get an under market value. Because even if they're losing their full deposits, you're still at the lower band of what the resale market is trading at. Now, of course, I've talked about why pre-construction is so expensive, like numerous times on this channel, so I will spare you guys the whole rigmarole here. It largely comes down to land cost, building costs, and development charges. So this is the high-rise residential building costs in Toronto, indexed to 2017. So you can see today we're sitting at basically up 98%, something like that. So the cost to build has pretty much doubled in a very short period of time here. And you can see most of it happened during COVID. People will always ask, well, then why do people buy pre-construction? And if there's one thing I've learned being in real estate sales and prior to that being in SEO and digital marketing sales is that people will pay a premium to defer discomfort. And so it's not just the breaking down of the deposits, right? So instead of having 20% down today, you break it into 5% chunks. It's not just as simple as that. And it's not as simple as people just like new product. A big part of the reason is because you sign a contract, you hand over checks, you get a glass of champagne, you walk out of the sales center and you don't think about that thing for 5 years. So it's the deference of getting the mortgage, of worrying about getting a good tenant, of any of that. You're pushing it out into the future and people are willing to pay a premium for that. And it's also worth noting that when prices are rising rapidly, like they were through COVID, people are far more willing to pay a premium for a product that's 5 years out. Because of recency bias, everyone assumes, oh, this is just the way the real estate market trades now. And so, of course, I'm going to make a return on this product when it finally comes to close. But when rates are rising and prices are falling, suddenly nobody's interested in taking that bet. And that's what we're seeing today. So this year, for example, just shy of 14,000 units were delayed by developers. And that's why I kind of show this band skewing closer to market value a little bit over time, is because you're going to start to see cost of construction come down as housing starts to slow down. We're already starting to see it. So forming, for example, is down 20%, land price is down 20%. But to an actual pre-construction buyer, that brings a condo building from $1,600 a square foot to $1,500 a square foot. So it's still not like it's at resale par. But what's interesting is, and this is part of the reason I think that we're closer to the bottom than the top, is look, there is still demand for pre-construction, which surprises me, right? Yes, right now I have a ton of demand for assignment deals, people looking for distressed deals because they're trying to sort of front run the cuts. But we also still have a lot of demand for pre-construction if it's priced right. And what I mean by right is it's sort of in the lower band, so it's closer to market value. If you look at the third quarter pre-construction launches in Toronto, what you'll notice is only one did really, really well. It was Pickering City Centre by Centre Court. So they sold 95%. So the idea that there's no demand sitting on the sidelines is, of course, proven false by this successful blowout launch. And you can kind of see the reason why here. Pickering resale condos, believe it or not, I have no idea why, but they're around $1,000 a square foot. So if you come out at $1,050 a foot, even if you take some of those costs and put them on closing, right? So you increase closing costs a little bit more than what you would normally see in development charges, that kind of thing. So your effective price is maybe $1,100 a square foot. You're still within a 10% spread of resale. And so that's more digestible to someone than paying $1,700 a square foot in Moss Park, for example, where resale tops out at like $1,300. So again, looking at this through the lens of you are out there looking for a deal, what should you be looking for? Well, resale is obviously a better option than pre-construction. And it's always kind of been this way. It's just more this way today than it used to be. And this brings us to something I call return on pain in the ass, okay? And this applies probably in way more areas than just real estate in life. Pre-construction is a very easy and digestible thing. Like I said, you walk into a sales center, you hand over some checks, and you don't think about that thing for 5 years. It's very relaxing, right? Resale's a little bit less so. You have to have your 20% down now. You have to be ready to get a mortgage. You got to get your financing in order. You have to close on that condo. You have to do all the due diligence. And then, of course, you have to turn around and rent it out. Now, because everything's publicly listed on MLS, you're competing with anybody who wants to buy a condo. And so there's a very limited spread of how good of a deal you can really get, right? We'll call it plus or minus 5% above and below market value, right? So maybe you're looking at condos in good buildings that are marketed poorly. Maybe they've been on the MLS for a while, the listing is stale, and maybe the photos were even taken by the realtor. How shocking. And so as a result, you might get, 5% under market value, but you're not getting any sort of screaming deals in the resale market. And this brings us to assignments, the biggest pain in the ass marketplace to play in when it comes in condos, but also where the most value is if you know what you're looking for. So you can pay over market value for an assignment very easily. Like I said, there's a lot of people out there fishing. So they're listing their condo at original purchase plus 5% because they're going, hey, I'm not going to lose money on real. I'm not the guy who's going to lose money on Toronto real estate. What am I, an idiot? And so they don't even care what the thing's worth. They're just saying, hey, look, this is what I paid plus 5, plus 10%. That's what I'll sell it for. Doesn't necessarily make it a good deal, right? And then you can also get up to 20% under market value. If you can get tier one financing on a deal, you have 20% under market value and it appraises. I mean, technically on paper, you have 20% equity baked into that property, right? But again, you just have to know how to look for these things because you're going to be on places like Facebook Marketplace. You're going to be on Kijiji. You're going to be on email lists and you're going to be talking to brokers. That's the most important part. And that's why it's the highest pain in the ass. Now, don't get me wrong. If you buy a pre-construction, a resale condo, or an assignment condo in 15, 20 years, yeah, you're probably going to be happy about that choice. But I'm talking about getting value relative to the market value today. I think assignments is the best place to do that. It's the most fragmented market. It's the most misunderstood. Most realtors don't even know how to do them. And so that's where the value is really going to be. And of course, it is the highest pain in the ass. Like this deal, for example, took, I think, 10 days back and forth between lawyers structuring the deal, figuring out when we were going to pay deposits, getting builder consent. Like all of those things take time. But regardless, you can find good value out there. But there is a time limit on that value, okay? And here's a chart that kind of illustrates that. So Dan and Ben here charted out pre-construction closings versus market value. So they charted this out to essentially show the equity position of pre-construction condo closings coming up around the GTA. And I think they're going to be releasing a report that goes into this in more depth. Basically, what you can see is that we've got this one project here closing in 2023 where people are 80% up, right? And then you've got a couple others towards the end of the year where people are 20% above market. So their original purchase price is still 20% below where current condos are trading for in Oakville, right? So I would rather pick up an assignment at a project here, have someone lose, half of their deposits. Now I'm 30% below market. Now, if I'm in the camp here that says, next year is going to be really tough, and I think at least the first half will, but if I'm in that camp and I say, hey, another 5 to 10% reduction in prices across the GTA seems reasonable for next year, so I'm going to wait to start looking at assignments in a year. Well, now I'm not looking at these closings, right? Because they're already in occupancy. So now I'm looking at these ones. And for example, if I'm looking at this one and the seller is willing to walk away from their entire deposit, right? This seller walking away from their entire deposit is a way worse deal for me than me actually paying the original purchase price on this unit and having 20% equity in there. And we could go through numerous examples here. It also applies in Mississauga. So you can see most people closing in Mississauga this year are up anywhere from 5 to 40%. But once we get into 2024 and 2025, the vast majority of condos closing in Mississauga are negative equity. So once again, a tough situation as an assignment buyer to actually find a deal worth purchasing. Once again, if you want to look at our assignments, you can go to precondo.ca/assignments and you will get that list. But again, you got to talk to brokers. I know nobody likes talking to us, but at the end of the day, asking prices are just that. They're just asking prices. We're throwing out a line. We're fishing. We're hoping for the best. But you'd be surprised how many people are willing to go way under that. So email me directly if you know what you're looking for. If you know what you're looking for and it's not on this list, again, email me directly because we don't put everything out there public. And look, the last time I made this sheet public, I got a bunch of comments and emails that were like, hey, I thought the deals were going to be, I thought people were distressed. I thought deals would be better than this. Look, guys, asking price is just that. It is asking price. Okay. Nobody's going to publicly list at, original price minus 200 grand. That doesn't mean the deal can't be done. It just means you got to talk to people and structure these deals. Again, I reiterate, return on pain in the ass. But if you are willing to go through the pain, look, we do a lot of assignments. We'll show you not just what's on this list, but also what's out there. Again, good deals are made, not found. So if you are looking and you want to find something that is under market value, or maybe you just want to put some feelers out there, email me directly. That's the easiest way to get the ball rolling. And I will see you guys next video.